So my name is Dr. Talitha Washington. I am the past president of the Association for Women in Mathematics, and our current president is President Reagan Higgins. So I am standing in for her today as her backup introducer, not singer or dancer. We'll get to that later. So today we're going to have a seminar on numbers that count, unlocking financial mathematics, a topic that I am really interested in, and I'm sure you all are too. How does math unlock finance and money? Check them out on LinkedIn, form a connection, write down questions as they're speaking, throw things in the chat. You're welcome even to put your LinkedIn in the chat if you want to connect with each other. I'll put my LinkedIn in there as well. And with that, I want to say a big shout of thank you to our organizers, Jasmine Bhullar, Judy Chiang, Beth Donovan, Monica Morales Hernandez, and Sarah Ziesler for really making this seminar work and be informative for all of us, including myself. So with that, I am going to turn this over to our organizers.
Thanks, Talitha. So we're just going to get started. And our first speaker will be Choey Lee. So Choey is a quant researcher in systematic trading at a hedge fund in New York. Before this position, she worked for the New York Stock Exchange and Goldman Sachs for 5 years. She mainly focuses on systematic equity trading strategies across days and intraday, including signal generating, transaction cost modeling, portfolio optimization, data and platform building, risk modeling, etc. So Choey, welcome.
Thank you. Thank you. Hi, everyone. This is Choey. It's actually my first time to attend official woman event. So thanks for having me. So yeah, I'm gonna start with a very simple introduction Sarah already did, and I'll go into the field that I've been working in for a couple of years. So I actually graduated from U Chicago Financial Math program about 4 years ago. I started my career at Goldman Sachs, which is a big investment bank, working in risk model and automation in New York office. Then I moved to New York Stock Exchange in equities trading, and I'm now working at the hedge fund as a quant researcher, also in equity systematic trading. So as you can tell, I kind of all over the places on Wall Street by now. But I've always been on the quantitative side of work. So systematic trading. Systematic trading has another name called robot trading. So generally speaking, it just means all the trading decisions are fully made by one or multiple mathematical models, and all the executions are made through system, following a preset of rules and procedures. So technically, we could systematically trade all the equities or stocks and any other assets as long as they show enough trading volumes and liquidity with some sort of universal patterns that we could observe. At my current role, I have two main focus. One is about data or infrastructure work. Another focus is modeling and research. So for the data and the infrastructure relevant work, it involves heavily coding, engineering, development projects, including writing API to download and process real-time data, integrating a multiple system with the internal system, or creating tools for your team or the firm to use, such as a real-time simulator or backtester, some AI agent type of tool to help with smarter executions, as example. Another focus, the modeling and research side, involves more stats or math-driven projects, including finding new ways to generate the alpha, which is a term we use for excess return on the asset you're trading, or solving different optimization problems in different parts of trading mechanism, such as factor construction in your portfolio, balancing transaction cost and the stock returns, or leveraging machine learning models to better filter names we trade or discover new patterns. I'll share a few typical problems just to give a taste on the questions we're trying to answer every day. So every day we trade hundreds and hundreds of stocks. So how can we trade so many stocks such that we can beat the average market but keep our cost low? How could we trade those names across all regions around the clock in different parts of the world? Should we trade different products? Should we trade all at once or in different basket? How to determine, you know, what kind of basket we should use? Can we just have one universal math model to predict where the return and cost will be in different economic cycles or different market scenarios? And when we pick those hundreds of stocks, what factors, what parameters we should look at? How can we put them in a construct model and trust it to make correct but dynamic decisions, every minute, every hour, every day, every week? Is it going to be a multi-factor regression? Is it going to be enough? Should we use a nonlinear model like a reinforcement learning, or maybe a mix of both types? So those are the typical questions we're trying to answer every day. But all of them essentially are about optimization problems. So I'll give an example. In portfolio construction optimization theory, you may have heard or may have studied. We traditionally take those approach called mean variance optimization, where we're trying to maintain a target return while minimize the variance of the entire portfolio, which usually includes hundreds of stocks or perhaps a big quantity of more exotic products like options or futures or swaps. We could and usually do customize the constraints in this model, such as capping the maxima, a notional traded volume, or changing the percentage of us participating in the entire market, or clipping the impact of outliers we spot, which could show promising return but at such a high cost. We also customize the loss functions itself and the factors we use in those models. And often we create different types of models just to test their performance. And to better tune any model, we need to understand, how different input and how any model is constructed could contribute to different results. And more importantly, what we can learn from the errors and the difference in the performance we saw. So typically in a hedge fund, quant research takes end-to-end responsibility. And so a researcher needs to be more comfortable with coding or development type of work, as well as, stats or math concepts and methods. So essentially, you're not just a researcher, you're also an engineer, you're also a data scientist. And actually nowadays, with the help of those AI tools like ChatGPT or DeepSeek, and one person could really wear multiple hats and do more things at once. Well, meanwhile, I think the fundamental understanding of the scientific method and ideal generating may have become more important, just because making an idea happen became slightly easier than in the past. And yeah, of course, and there always is and will be something, we never learn or even heard of from our academic life or school. But most of the time, we figure things out as we learn on the go at, I guess, any job. For me, a quant role could get a bit stressful sometimes just because trading in nature is a fast-paced environment and it does often require the quicker reaction to solve unexpected issues. And sometimes it could get a little bit frustrating just because your research work may have marginal improvement. But anything you do have a huge impact, and you could actually even watch your impact in the real-time trading. So for example, anything you do in your trade may push any stock price going higher or lower, as we work with a really large capital. So in general, core research is exciting, but with some level of stress. So yeah, that's my I guess introduction of my role and my experience. Um, and I'm happy to take any question later or now.
Hi, Choi. Thank you for your talk today. I was wondering if you could talk a little bit about what your work-life balance is like, because I know that finance kind of has the reputation of being very demanding, in terms of work hours.
Yeah, of course. So I think it depends on the firm and the team. And actually, quant is a general term. So you could be a quant in banking, you can be a quant in risk, you can be a quant like me in trading. So for me, this hedge fund, I joined it last year as a startup hedge fund. To start with, it was difficult in terms of work-life balance, just because when you have very few people, but you have to build the entire system, you have to build the entire strategies. Everyone work a long hour, but once your firm or your team goes to a more mature stage, or we call industrial stage, it's not too bad. You would have a normal work life, I would say. Time-wise, it will be you will really have you don't really have to work at night, for example. Maybe sometimes on weekend, but not always. And again, trading hours, let's say US is just gonna be 9:30 to 4. You really couldn't do that much outside of this range. So yeah, that's my personal experience for that.
Right. Pleasure to meet you. Thank you so much for sharing your experience with us. I noted that you mentioned you studied financial mathematics. Is that right?
Yep, that's right.
Is there
Yep.
yes, is there any pure class or did you take any pure mathematics class that you think helped you advance in your career, and especially in finance, that it's such an applied field?
Yes, actually, my undergraduate degree is in math, but I took applied math at that time. I took a lot of theoretical courses, but then so I was on the applied math path. And then in the financial mathematics, to me, it's still like a sub-branch of math, because the finance side it was not really difficult, to be honest. If you read some CFA books, you would have pretty like enough knowledge on finance industry. So, and then all those financial questions, like the questions I shared, essentially they're just math questions. So, I, to me, I think the stats courses, um, the fundamental courses in the financial math, like portfolio construction, and if you're interested in option pricing, are definitely really helpful courses. And nowadays, I think machine learning has become very important. So anything on that field would be a huge help.
Thank you.
Okay, so I'm going to ask everyone to, if you still have questions for Choey, can you put them in the Q&A, and we will come back to those at the end. But I think right now I'd like to thank Choey very much, and we'll move on so that we make sure we have time for all of our speakers. Okay, so thank you, Choey.
Thank you.
Okay, so our next speaker is Anshika Bajpai. Anshika graduated in 2021 with a BS in mathematics and a concentration in physics from the University of Chicago, where she developed an interest in energy systems through internships and research. She's now based in New York City and works in equity research, covering North American energy and energy transition stocks. Thanks, Anshika.
Thank you. Yes, I can spend the next few minutes kind of introducing myself and what I do in my current role. And I wanted to focus a little bit more on my journey and how I got here, maybe for people that are still in the stage of thinking about whether this is really a field that they want to enter and what that path could look like. My name is Anshika. I graduated 4 years ago from the University of Chicago with an undergrad in math. I studied kind of both math and physics and ultimately landed on the math major because I really enjoyed the theoretical side of things. I really enjoyed like writing proofs for theorems and things like that. And as a student, I wasn't entirely clear on what path I wanted to take after graduating, whether I wanted to study more or start working immediately and in what field. And I felt like math was kind of the option that kept all of those paths open. Um, and so also while I was a student, I was kind of interested in learning more about the energy sector and being involved in that field and being involved somehow in the energy transition, but I wasn't entirely clear on how I would apply what I was studying to that field, because there's a lot of different directions that you can take. You can, go to law school and approach it from a legal perspective, or do kind of policy work or core like science research, or of course finance from an investing perspective or project finance and things like that. So I did a bunch of different internships. I worked at a startup that was developing a new kind of battery technology, which I enjoyed, but that was ultimately more sort of chemistry and engineering focused. I also worked at a project developer that was building solar energy and storage assets in the US, which I also enjoyed, but ultimately decided that I wanted to do something a bit more analytical and research oriented, whereas that felt sort of more operational. And kind of concurrently, I was interested in learning more about finance. It wasn't really a field that I knew very much about at the time. And I remember my first exposure really was taking a class at the business school on derivatives pricing, so options pricing and other derivatives that I really enjoyed. I really liked the level of challenge that the problems presented, and I just thought it was very fun. So that class kind of convinced me that this was an area I wanted to look at more. And so the following summer, I interned at a very small fintech startup in kind of a very introductory sort of role where really the main thing that I learned was reading financial statements and learning how to understand businesses and companies based on their financial reporting and regulatory filings. So that was a great experience as well. And by the time I was graduating, I sort of found this role in equity research covering the energy sector, which at the time, again, I wasn't fully sure of how it fit into the broader landscape of finance and active equity management, but checked a lot of the boxes that I was looking for. For one thing, having worked at all of these startups, I knew that I wanted to start my career at a more structured organization in kind of a bigger company. And I was able to demonstrate a lot of the background that they were looking for. Like they really valued things like quantitative reasoning abilities and that kind of analytical skill that I was able to show from my undergrad degree. But then they also liked that I had sort of a little bit of an exposure to the field of finance and could say that it was something that I was genuinely interested in pursuing. And of course, learning more about the energy sector. So it sort of fit a lot of my interests in many different ways. And it worked out. I've been working there for 4 years now. So basically the whole time since I graduated. And I can talk a little bit more about what exactly I do. So like Choey, for example, is in quant research. So it's like mathematical models that are kind of automating this trading. But what I do is more on the active management side, where you're a fundamental equity analyst. So you actually look at companies kind of from a bottom-up perspective. You're analyzing individual stocks and you're reading their financial statements and you're talking to their management teams and kind of coming up with investment theses at that kind of like bottom-up level. So yeah, equity analysts basically value publicly traded companies to price their stock and have an investment view. So you have kind of the buy side and you have the sell side. I'm on the sell side. So on the sell side, you have analysts that publish these analyses and research reports and have like a buy, sell, or hold recommendation. And on the buy side, you have investors that are not public facing in that way. So they're not actually publishing the research, but they actually like they invest money in these equities based on their investment views. So the way that it works on the sell side at my company is that you have different teams that are very small, typically 3 or 4 people, and each team focuses on a particular sector and looks at a handful of stocks within that sector that they cover. And the day-to-day involves sort of following those companies. For us, it ranges from like 7 to 15 companies, so a very small number. So you're following them really very closely. You're keeping track of all the news flow, and you're keeping track of any sort of data releases that come out that might inform your investment view in any way. And anytime something happens, like when they report earnings for a particular quarter, or if there's an important piece of news, or if there's like a government agency that tracks some sort of data on like consumer behavior or production of a particular commodity, for example, you would kind of analyze all of that, publish research if it informs your investment view. And then clients will read that, and they're essentially looking to that research to sort of build and develop their own investment views. So our clients tend to be sort of the larger institutional investors, so like hedge funds, pension funds, mutual funds. And so a lot of the job also involves communicating our research and our views to these clients. So I would say the role is definitely a mix of quantitative and qualitative skills. There's a lot of people with technical backgrounds that study things like math and engineering, but also a lot of people from other backgrounds that don't necessarily have that same kind of quantitative focus. There's definitely a lot of flexibility across teams and sectors on how technical you want the analysis to be. So because I'm in energy and there's a lot of data in the sector, we can tend to get a little bit more analytical in the research that we write. But generally, there's definitely a range. And the things that you're kind of using are any sort of statistical tools that would help you with forecasting and trend analysis, and of course, things like discounted value for pricing stocks. So like an example from our research, something that we think about a lot is modeling resource availability and the evolution of a commodity's inventories based on where production is currently and where we think it's going to go. Because this will inform your view on commodity prices, and that would then inform your view on the stock price of a company that may trade that commodity, for example. So I would say the skill that's most important really is being comfortable with looking at large quantities of data and a lot of quantitative information, and being able to kind of parse through that and identifying signals that would be relevant to your work and the questions that you're trying to answer. And I personally like the fact that there's also a qualitative side to the work that we're doing. Like a lot of my work involves writing, where you kind of synthesize your investment views and construct an argument that you can then communicate to clients. And so you're also holding meetings and doing presentations. So you're kind of building those like communication skills and public speaking skills as well. And in general, it's kind of a great way to learn how to think critically about companies and public equities and kind of get the lay of the land of a particular sector and active equity management in general. And there's a lot of different paths that people follow from here, but sort of the more common thing is to eventually move to the buy side and become an investor yourself. So yeah, I can kind of stop there and happy to take questions.
Thanks for the intro. That sounds really cool. I'm currently a student at Siena College. I'm a finance major and I have a math minor, and I've taken classes on derivative pricing across various instruments, so fixed income instruments, equity instruments, and I'm going into the sell side as an analyst in the city this summer at a institutional level. What was like the most critical thing you kind of would say in terms of understanding analytics and math going into a role like that?
Yeah, so like I said, how technical you want to get will really depend on the sector. And the main thing really is whether you're able to identify catalysts that investors and clients will be interested in, and kind of identify trends that would somehow inform your investment view on a particular equity. So yeah, I would say none of the tools that we're using are necessarily that technically complicated. And I would just sort of reiterate that by far the most important skill is just being comfortable with numbers and being able to absorb a very large amount of quantitative information and, parsing through that in whatever way is most suitable to you.
So Anshika, thank you. Okay, so our next speaker is Madison Rusch. Madison graduated from the University of Chicago's financial math program in 2023. She currently works as a senior software engineer at Garda Capital Partners, supporting quant analysts on their data engineering team. Before that, she worked for Optum Incorporated as a software engineer. She stays connected to UChicago through the Industry Professional in Residence program and enjoys working with current students to accomplish their career goals.
Hello, thank you for the introduction, Sarah. Yeah, so as Sarah said, I'm a recent graduate of the University of Chicago FinMath program, the same one that Choey's from. In my current role, I work mainly with Python and C# as a software engineer. Last year, I was working with our risk team, helping them establish models to optimize VAR across the fund, and make those reports available to our PMs, our portfolio managers, so that they could make effective decisions in their roles. I recently transitioned to our data engineering team, supporting more of our quant analysts, getting them any data that they require to do their jobs, and then just sort of in general creating efficient pipelines and code deployment to sort of keep that running smoothly for them so that they have much less manual work to do. A little background on me, I did my undergrad in math and computer science at St. Lawrence University in upstate New York. I joined Optum as a software engineer. Optum, if you don't know, is a services company in the insurance space, so not finance related at all. I decided that finance sounded more fun, however, and so I went back to get my master's in financial mathematics, and then got the role at Garda after graduating. I did an internship with them in the summer during the program, and then joined them after graduation. Garda is a fixed income hedge fund. That means that generally speaking, we invest in treasuries, a little bit of cross currency. We do some mortgage-backed securities. We're a smaller firm, about 200 people internationally, between our offices in Singapore, Geneva, New York City, and Minneapolis, Minnesota, which is where I am based. So I would say that in terms of the mathematics that get used at our firm, at least in my role, I believe I mentioned earlier working with the risk team and doing some VAR modeling. We put out a web portal for the PMs and analysts to use to determine how a certain trade might impact the VAR of their portfolio, and we did that using an optimization model. So for them, it was pretty seamless, right? They go in and they say, we want to trade this in this quantity, and it sort of spits out, this is what that would do to your VAR, and this is maybe a suggested trade instead based on the optimization model to say you could get much less VAR, value at risk. I'm sorry, I should have explained that term. Value at risk if you would do this trade instead, or trade this product, or trade this quantity. So really, my job is to make the math seamless for the analysts, make the data automatic, and really just allow them to do their jobs as easily as possible. I would not say that I'm a quant. I would definitely argue that I'm more on the software engineering side of things. But financial mathematics is very important in my role because I need to be able to have clear conversations with the analysts and the traders to know what they want us to implement and to be able to do it in a way that's effective for them. So a lot of times what that means is speaking their language, understanding what they're looking to get out of the processes that I create, whether that be a portal or a data process, speaking to vendors, getting data to them and from them. And then I think the last sort of topic that I want to mention is, how being a woman has impacted me in this career. I think we're all here, or most of us are here because we're women in STEM fields. And, that's both a detriment and a benefit to us, right? So the way that I've found it to be beneficial is speaking with other women at my firm, being able to form connections across teams and hear their jobs from their perspectives to be able to support them effectively, to understand where they're coming from. I think sometimes it's easier to connect with other women than it is with men in finance. So I think that's actually been very beneficial for me, to sort of form connections with other women because we all kind of feel like we're in the same boat here. And it is also a challenge. I am the only female on our R&T team, our research and technology team in the entire Minneapolis office. I'm sure other women here have similar stories where they can say, we're one of 10 or two of 10 or even more than that. But, I think it's good. We bring a diverse perspective. We bring a different background to the field. And I would definitely say that there needs to be more of us in the field. I am definitely for women in STEM and women in finance. So in terms of that, like if I had to give advice, gosh, I mean, stay true to yourself, right? Don't look at it as being a weakness. Look at it as being a strength. Capitalize on your strengths as a woman. Maybe that's forming stronger connections, talking with alumni, talking with other women at your company. Maybe that's, finding roles that maybe fit your interests outside of work. I really think that my advice would be generally to not give up if it seems difficult. Just keep going at it. There's definitely a space for us here, and if there isn't, then we should make one. So I'm afraid that was a little shorter than others, but if there's questions, I'm happy to answer them now.
So thank you very much, Madison. Our last speaker is Jennifer Marietta-Westberg. Jennifer co-heads Cornerstone Research's corporate and government investigations practice, advising on complex financial litigation and regulatory matters. She's a seasoned expert witness who testifies in high-stakes cases, including securities, class actions, and enforcement actions. Formerly, she also chaired the SEC Investor Advisory Committee and served as Deputy Chief Economist at the Division of Economic and Risk Analysis for the SEC. Her research has been published in leading finance journals. Thank you, Jennifer.
Great. Thank you for the introduction, Sarah. So I'll start by going through my background. So I do have an undergraduate degree in math. Then I started the math PhD program at the University of Iowa. That's where I first met Darla Kramer, who's on the call here. I was in the program for 2 years, and then I started to explore some other PhD programs and ended up switching to finance. I had a family friend in the business school at the University of Iowa who was part of the marketing faculty. And the reason I started to explore some other PhD focuses that would still allow me to use my mathematical training was because I wasn't sure at that time, this was in the mid-90s, whether it was going to be quite difficult to find a position as a math professor. And that was really my goal. From the moment I entered undergrad, I wanted to be a professor. And I just felt at the time when I was an undergrad that math was a very beautiful subject. So I chose that to study, but did not do a ton of research on how difficult it may be to find a position as a math professor. So I learned more about that once I was in the PhD program. I learned it could be a little bit difficult to get a position. It may not be very lucrative. And so through discussions with this family friend, I was introduced to the chair of the finance department at the University of Iowa. And then what I did was stay in both programs for 1 year, just to make sure I really wanted to make the leap. So I was through the first 2 years of my courses in the math PhD program and had a year with just a couple of study courses. And then I started taking the intro courses for the finance program. I enjoyed that, and so I decided to make the leap. And then in the year 2000, I graduated with my PhD in finance. So financial economics is just a subset of economics, but typically there is a separate department, a finance department, usually in business schools, whereas the econ department is their own group. They are often in a college of liberal arts. And so while there may be overlap in courses that you take with the econ department, you're really in your own group with the finance faculty and those students. So I'm glad that I made the switch ultimately because I was able to use a lot of the training and what I loved about mathematics. Also, I had been studying more theoretical math, and when I switched to finance, it became very applied, which I hadn't realized at the time was something that would be important to me. But I really enjoyed the ability to apply the mathematics to sort of real world problems. For my dissertation, I studied various investment strategies related to initial public offerings and other topics. When I graduated in 2000, my first position was an assistant professor in the business school in the finance department at Michigan State University. While I was there, I conducted research continuing in the area of initial public offerings and investment strategies. And then I taught the investments course to undergrads and graduate students. I enjoyed that. As I said, that was what I had envisioned from the minute I entered undergrad, was that I wanted to be a professor. And it was an enjoyable profession, but I started to feel like maybe I wasn't using all of my skill sets. I thought it is a little bit lonely sometimes as a professor, not always super dynamic. It really depends on where you are, which university, what research area you're in. So a lot of factors can go into that. So after a few years, I thought maybe I should visit somewhere that is kind of a hybrid research environment to see, is there a transition that I would like to make? Do I want to stay on faculty? And so I ended up going to the U.S. Securities and Exchange Commission, which is one of the primary agencies and financial regulators in the U.S. I first went there on a visiting scholar program, and so intended just to stay 1 to 2 years. That was pre-financial crisis, so that was in the year 2006. I happened to still be there when the financial crisis occurred. And that turned out then to be a really interesting time to be at a financial regulator. Very dynamic, very intellectually engaging, lots of applied opportunities to use my training to help the regulator figure out how to manage the crisis at that time, and then coming out of the crisis, how to potentially adjust financial regulation in response to the crisis. So before I knew it, I was at the SEC for 10 years. When I left, I was the deputy chief economist in the economics division. Then I joined Cornerstone Research about 8 years ago. Cornerstone Research is a firm that specializes in litigation support. So really, we're working at the intersection of law and finance. We work on government investigations, we work on private litigation, and we are providing economic consulting support or expert witness support. So if you've read anything about trials that may happen, you may have big company A suing big company B over patents or all sorts of other things, and we're there potentially to opine on damages. So you can have two economists, both may make different choices about how to model something. And so the courts ultimately will listen to each expert and their methods and then make a decision. So it's just really interesting work. And I did not plan any aspect of my career, but other than I originally wanted to be a professor, but sort of how it's played out now makes a lot of sense to me. So first I learned how to conduct research, how to think about hypotheses, develop the training in order to carry out and make inferences from that research. Then obviously in the field of finance, then I was at a financial regulator. So I learned about how the financial markets were were governed, continued doing research, and then now I'm ending up with how do the courts uphold financial regulations and disputes related to that. So in retrospect, it's made a lot of sense. Now, I use my mathematical training all the time, heavily relying on both math and statistics background. We've already heard from some of the speakers today that in the investments area, you're going to study things like portfolio theory, asset pricing. You're going to use a lot of regression analysis and hypothesis testing. Definitely computer coding and learning different languages. I do less of that now in the position that I have, but the teams that we have at Cornerstone, all of our work relies quite a bit on coding. And we have people in all sorts of different positions at Cornerstone. So we hire undergrads right out of school. They work on our analyst position. We also hire MBAs and PhDs who typically start in an associate position. And then we have a career path that plays out from that. So, but I would say not just mathematics and statistics training have been important to me. Really, every position I've had, communication, both verbal and in writing, has been hugely important. So the ability to communicate economics to non-economists has been crucial. So starting with teaching when I was a professor at Michigan State to students, not all of the students, I was in the business school, so not all of the students were finance majors. It was really important to make sure that they understood the concepts of the course and could get a lot out of the course. Then when I went to the Securities and Exchange Commission, the economics division, you could really think of that as like an in-house consulting service for the commission. And so our in-house clients were the accountants and the attorneys who work at the SEC. And we were constantly having to explain the economics in a way that the attorneys could wrap into the rulemaking that would get shared publicly. And so those who are not trained in economics could understand sort of why the rule was being passed, what the cost-benefit analysis determined, and things like that. Then I'm doing the same thing at Cornerstone. So the clients that hire us at Cornerstone are typically law firms. And as we work through things like damages calculations that I mentioned, we have to sometimes explain complicated modeling in a way that not only the attorneys will understand as they draft their briefs to argue the case, but then ultimately we may have to present our work in front of a judge or a jury. And judges may have some financial expertise just from if they specialize in cases that deal with the financial markets, but a jury typically may not. And so that ability to communicate has just been crucial at every part of my career. Then just reflecting on being a woman in this profession, it was interesting to me when I made the switch from the math to finance. There were many more women actually in the math PhD program than in the finance program. So when I started the finance, made the switch, I was the only female PhD student, and there were no female faculty until my final year of my PhD program. So that was quite a change. I enjoyed the program. I got a lot out of it, and I think it served me well, but I definitely missed the more mixed environment of the women in the math program. Then when I joined the tenure track faculty at Michigan State, I was the only woman on the faculty for a couple of years. So, that was, it could present challenges sometimes. When I was a student, one of the things that could be difficult is sometimes, since the faculty were all male, sometimes they might go running or take people to lunch one-on-one. And, they weren't always comfortable, like a male faculty member taking a woman student to lunch, not because they would behave inappropriately or anything strange like that. It just, wasn't always something that just naturally came up. Ultimately, I don't think it hindered my development in the program, but it was just, something that was a little bit different from what I had experienced in the math program. Then I was really excited when I joined the SEC that there was definitely a much higher percentage of women at the SEC. in the economics department, many of them with PhDs in finance or economics. And then at Cornerstone, I just feel really lucky because our firm was founded by three people about 35 years ago, and two of them were women. So that's very unusual for two women in the 80s to join and found a consulting firm. And I think it's really just been a huge benefit to our firm because we are a very collaborative, very teamwork-oriented environment. And we're a firm where business development is very important. So we have a lot of competitors in the economic consulting world, and so we're competing against them to be retained by law firms and ultimately the clients behind them. And so having a teamwork, collaborative, oriented environment, I think just really helps everybody as they do business development and figure out how to have a book of business. So that describes a little bit about my experience as a woman in a field that of finance where typically there aren't as many. And just reflecting overall on advice that has served me well throughout my career. I was willing to take a chance on different career paths, as I mentioned, switching from math to finance, and I'm glad that I did. Also, I'm glad that I have a PhD. It's really given me a lot of options. You can see that I've switched from academia to the government and then now to the private sector. And there are even more opportunities that were available to me. There were some international opportunities I could have taken when I looked around. And so having a PhD in finance or economics, with all of that mathematical and statistical training, I think really opened up a lot of these options for me. And I've enjoyed it. So it's not just I went where the jobs were. I really enjoyed math. I said I entered it because I just had a love of the subject, but I felt the same about finance as well. And so not only did I take a chance on switching careers, but once I entered the finance field, I've said yes to a lot of things along the way. Sometimes women are advised to be careful because we may say yes to too many things. And I do think that's a real risk. So you get yourself potentially overburdened, let's say, with like administrative tasks if you're in an academic department. And male professors may be not as inclined to say yes to those, and so end up having more time for their research. So that is a real risk, but I do feel like saying yes to not just administrative things, but different types of projects, substantive projects, has helped me along the way. Then it gave me a set of expertise and experiences that other people didn't necessarily have. So when opportunities opened to move up in the organization, I had those experiences that made me ready to take advantage of those opportunities. So I just encourage people to say yes and to stretch yourself in good ways. And if you're not sure what the good ways are, go to your mentors and they can help you with that. And if I would reflect back on, if there's anything I might have done more of, I would say just always taking advantage to broaden your network and to really maintain your relationships. Darla and I were joking that the last time she saw me, I had my baby son in my arms, and he's now 21 years old. So a lot of time has passed since we've seen each other. But also in the finance field, it's a very small profession, you find. So there's people going to school, all sorts of different schools. They're earning their finance PhD. You think it's a big network, but you end up seeing the same people over and over again in the field. And that has, I've been glad that I have had those associations, because as you want to brainstorm maybe about making a change to your career, or you want to recruit people. I wanted to recruit people when I was the deputy chief economist to work at the government. And so it was helpful to have a great network. Or now here at Cornerstone, we're constantly looking for good experts to retain on different subject areas, so that they can opine on different aspects of litigation. So I would just say, tend your networks and really be open to meeting people and broadening your network. I'll stop. I'm happy to answer questions now or later.
Yeah, I'm like a 6th year PhD student right now in the field of like pure math. And I just like looked up the positions in your company, looking like they're hiring associates, PhD. But they mostly, I think you guys are probably more interested in people with like economics and marketing background. I just don't know if that would be a fit for that role.
Yes. So typically, let's just talk about the different levels that we have at Cornerstone. So when we hire undergraduates, many of those come in with a heavy math or statistics focus as part of their major. But we also hire undergrads that have a finance or an economics focus, or even like something like public policy. At the associate level, we do tend to hire people who have at least some finance training. So they might have an MBA, they might have a master's in economics or a PhD in a related field. Sometimes we hire PhDs or those with experience in accounting. But I think with your more technical math PhD, there are a lot of Wall Street positions that do hire that kind of background. So I think there are a lot of industry positions that would be open to you as well. It's just we tend to hire those that also have some of the underlying economics training.
Got it. Thank you.
I was wondering what an example of hypothesis testing would be in finance. Um, would it be something simple like stock X is overbought? I think you had mentioned hypothesis testing, or would it be something more specific or more general than that?
Yes, well, there can be all sorts of things that you may want to test as a researcher. One of the things that can be very common in litigation is you may have heard of class action suits that come out when it's alleged that a company maybe knew something, let's say a year or two ago, but didn't reveal that to the public. And then once they did reveal it, their stock price drops. So people who bought when the stock was potentially inflated before the company came forward and was public about the information, people that bought beforehand may have bought at inflated prices and could be damaged. So one of the things that you'd like to do is test whether the stock price was inflated. And so you might run what we would call an event study, where you're controlling for in looking at the price movements for company X, you would be looking at what are the market and the industry movements at the same time. And so then you're sort of testing with the model whether stock price movements on certain days are different from zero. And so that can be one sort of hypothesis test. If you get your PhD and you're studying finance or economics, there's almost an infinite number of hypotheses that you could be testing. You know, what is there a stock price impact when CEOs turn over? When a company's CEO leaves and turns over, is there a statistically significant impact to the stock price? If there is, does it matter if the CEO was forced out, if the CEO died, if the CEO left voluntarily? You know, you're really kind of narrowing in on what's driving the impact. And there are just a whole host of other things that researchers tend to test, but those are at least two examples.
Thank you again. Before we head to the Q&A, can I request everyone to please join me in thanking the speakers once again? Okay, I'm going to pick some questions from the Q&A section, and some of them are directed to particular speakers, but if anyone else has any other perspectives to add, please feel free to join in. Ishita asks, can you elaborate more on the sell side to buy side transition? I think this was meant for Anshika.
Yeah, I'm happy to talk about that. So I am still on the south side. I haven't made the transition myself, but I know a lot of former coworkers that have. And really the difference is just going from more of an advisory capacity to being an active investor. And on a day-to-day perspective, the way that can look different is one of the biggest differences, I think, is that on the south side, for example, you're looking at a much smaller universe of stocks and you're looking at them much more consistently over a long period of time. So, for example, like there are analysts that I've worked with who've been doing this job for decades, and they've had sort of a very similar looking coverage that whole time versus an investor that's moving in and out of stocks. You're typically looking at, it can be like 50 or 60 stocks, or even more than that at times, and you're often not spending years and years trying to understand the story. You're spending a few weeks before you make that decision, and then you're kind of monitoring them, but sometimes you might exit and not look at them again for a period of time. So it's a different time scale. It's different strategies on the buy side. Like it depends on whether you end up at a long only firm or if you end up at a long short kind of strategy. If you're doing more event driven stuff, you're coming at it from a different perspective. And again, you're not sort of writing research for clients. You're more concerned with how your portfolio is doing. Whereas on the sell side, you're more trying to investigate stories that might be relevant to investors, and you have sort of more of a leeway to kind of think about how maybe the industry is evolving and like pursue those questions rather than sort of focusing more on whether or not you want to build a position or exit a position on a particular day.
I have another one for Anshika, and I'm going to club it with a more general question that someone had. So this particular one was about opportunities to enter equity research with a master's degree. And then someone also asked, what are the benefits of getting a PhD versus a master's degree in the job market?
Yeah. So like I said, there's people in this field that come from a very wide range of backgrounds. And that's like educational level, but also major. So a lot of people do their MBA and have like kind of very strong finance and business background. A lot of people have more technical background and come right out of undergrad. There are a lot of people that have master's degrees. So I don't think that there's really one particular path that you would need to follow necessarily. It's very kind of, the skills are general enough that sort of a range of different backgrounds can prepare you well enough for it.
I can speak to the PhD point for a moment. So I think you need to like research to be, in a doctoral program. You have to like sometimes a solitary existence, working very hard on your dissertation. You have to be willing to accept criticism and, kind of have a thick skin. And a PhD is not needed for lots and lots and lots of different job types. So really, have a passion for wanting to do research and committing yourself to a program that could be, 4, 5, 6 years long. Some programs do allow you to get a master's if you're in the program and then you decide, I don't think I want to stay for the PhD. So that can be kind of a good safety net if it ends up that you find it's not right for you. But just for me personally, with my interests, I'm glad I did end up getting the PhD, and it did open up other career opportunities for me. But there are so many opportunities without a PhD as well. So I think it's just going to be intrinsically driven, and talk to a lot of people about their experiences. And then that might help you kind of zone in on what your own desire is.
I'm just going to club this with a question that Polly asked, which is how valuable, I'm just paraphrasing, how valuable is industry experience before pursuing a PhD in finance or economics?
So I saw people, I did not have any industry experience myself. I just went straight from undergrad to the math PhD program and then over to finance. There were several people like me. There were some people that had a couple of years of industry experience. So I really don't think it's necessary for a PhD in finance or economics to have industry experience. You could, if you're really trying to figure out, I don't know if I want to do this. People have found that helpful to go into industry. Some don't go get their PhD and some do. So again, it's going to be sort of intrinsically what's driving you. And I would say if you're on the fence about getting the PhD, then my suggestion would be to try an industry position first. And if you really just feel like you're missing something, then you'll know that potentially it's right for you.
I have another question, and this was addressed to Choey and Jennifer, but I think Jennifer partially answered it. So the question was, when did you know during your undergraduate degree that you wanted to pursue a graduate degree instead of going straight into work?
I can take this one just because I didn't know. So I went straight to the workplace first after my undergraduate. Um, so exactly as Jennifer was talking about, I had the choice to go into academic, and many of my friends did. I was not sure. I like research. I know it from undergraduate because I followed a math professor at one of his math projects. But after a year, I felt it wasn't really there for me. So I went to a workplace and then I actually tried different departments. And when you're really young, when you're first year analyst, they let you kind of switch to different departments to see your interest. So, and many firms do have the program for young, new fresh graduates. So I think you could check out with a program. Sometimes you can figure it out just the internship program to know if you want to stay in academic or industry. And then it's just naturally after you work there for a year or so, you will know at some point.
Thank you for sharing your experience. So this question was, I think this is a general question, but maybe Joey, it would, maybe you would have something to say about this. What should someone, I'm again paraphrasing Fatima's question, what should someone with a basic programming background and limited optimization knowledge do to start a career in financial math? And how difficult is the transition?
From my personal experience, if you're already comfortable and had a background in science, it wouldn't be too difficult to transition to financial math. The only part is that I saw, including myself, I saw also a lot of people from math or stats or more theoretical background in science had a little bit difficulty in coding and engineering part. So it might be helpful if you are also comfortable with coding, like languages like Python at very least, like that it can, help you test your theoretical ideas in the practical world easily.
Thank you. I have another question for Anshika. The question was, what resources would you recommend for beginners looking to learn how to assess a company based on financial reports?
Yeah, I think someone mentioned that if you just kind of go through any of the CFA books, you'll have enough information that you need. I think it's a lot of learning on the job. I at least picked up everything that I did from the job, and you just kind of have to sort of go through it. Most roles within finance have some sort of licensing process. I had to get like 5 or 6 different licenses that kind of force you to do that process. And you take an exam and you sort of learn the basics. If you're still in school, definitely, take an accounting class if you want, or take like a derivatives pricing class if that's something that's interesting. Or, there's lots of resources online, but in general, it's easy enough to pick up kind of the industry specific knowledge once you have the technical in place.
This question is for Jennifer. Someone asked if Cornerstone has a preference between a master's degree in finance or in financial economics, and how much legal knowledge is required for the associate role.
So I would say little to no legal knowledge is required for the associate role. We just want the good training in economics or finance, or as I said, sometimes accounting, and then you will learn on the job. about the field of litigation and how law enters into that. So whether we prefer a master's in finance or financial economics, is that what you, yeah. I don't know that we would distinguish between those. So I think either would be fine. And PhDs, MBAs, or yes, sometimes the master's position as well. I should say that sometimes when we hire the undergraduates, they typically are analyst role, which is people hired right out of undergrad. The idea is that they will stay 2 to 4 years and then they depart. So there's not typically a career path for them to stay at Cornerstone all the way up through partner. But occasionally, sometimes the analysts will leave, go to graduate school. They might get a master's, they might get a PhD, and then they come back and they enter at the associate role. So, it really just depends on their interests at the time. But we have had people at the undergrad level work at Cornerstone. They've left. After they finished that 2 to 4 years, they've gone to grad school. They've gone and worked for tech companies. They've worked for Amazon. They've worked for nonprofits. Even though they're not in the field of litigation, they're sort of getting heavy experience in statistics and coding and finance. And so then they leverage those skills into a different profession.
This question is also for you. So if a job posting requires PhD, does a PhD in pure math count?
And well, I'm under the understanding, and the other speakers can probably speak to this more, that PhDs in math and more quantitative areas like that are in high demand for some industry positions, trading positions, and other roles. At Cornerstone, our PhDs, yes, we typically hire those that are PhDs in math, in finance, economics, or accounting. That's the typical background.
Would any of the other speakers have to add something?
I can add a bit on the QR side. Quant definitely have a lot of PhDs. They're from physics to math to economics and some operational research. But it really depends on what you're hired to do. Like, for example, in my group, PhDs are only required for a certain strategy that only use machine learning. That type of job is very specific, so they hire mostly just PhDs. But another aspect of QR may not even require a PhD. I'm not a PhD, and many of my colleagues are also not PhDs. So I think it really depends on that position.
I would second what Joy said. At my firm, we have 2 quants with PhDs, and they're doing very specific technical advanced curve building for us based on fixed income products. But for us, we always say in our job postings, we want this level of education or equivalent experience. So if we find someone with good experience in the field with the skill sets that we need, we may not require a PhD or a master's or what have you. I'd say in sort of our technical research space, probably 3/4 of our employees don't have masters or PhDs. 2 have PhDs and the rest have masters.
So this could be up to anybody, but I wanted to ask Madison first because Jennifer highlighted the importance of mentors, and I know that Madison, you work as a mentor in the finite math program. So I'm curious about what that looks like, and I'm also curious about whether mentors have been important in your own career.
Yeah, definitely. So I guess I'll start with the second part of that question. Mentors have been incredibly important for me. I was very fortunate in my first job after college to be on a team with a senior software engineer who was incredibly invested in training the junior staff. He was amazing to work with. He answered career questions for me. He helped me figure out what skills I needed to learn to advance in my career. And part of the reason that I do the mentorship program still with the FinMath Masters program is because I believe in mentoring and sort of passing it on. In terms of what that looks like, for me as an IPR, most of what I do is helping with mock interviews, or just talking to students about questions that they have about the field or different roles or how their backgrounds might fit in the industry. So I might ask students a bunch of Python coding questions. I might come up with LEET code questions for them to practice their online assessments. We might talk about the news that was really interesting at my job today. The jobs report, for example, came out today. That was big at my firm. So that is sort of how mentoring looks for me with the FinMath program. But additionally, I work with my company with our interns every summer to answer their questions and sort of help train them or teach them technical skills that they may not learn in school.
To second Madison's, I actually also benefit from having great mentors to help me guide in my career path, especially out of school when you didn't really know what you wanted to do. You probably didn't even know what you were good at. So you talk to a lot of people. I would also encourage people, especially if you just graduate or about to graduate, in your any internship, talk to more people, talk to seniors, get different opinions, get more insight on different things, and be open-minded to it. And at some point, I think the network you've been building would really benefit you because I believe when you're more senior, then the new job or new opportunity will come from the network you have as opposed to just the skills. You might be hired as a junior for your skill set, but I don't think that's the only thing or that's the most important thing when you get older and get more senior.
Thank you. Okay, I think we're almost to the end, but Travis asks, what's the difference in quant research and trading positions, and what type of preparation should someone do to be a good candidate for these jobs?
I can speak to that at my firm. So we don't do any sort of systematic trading. There's no automated buying, selling, anything of that nature. Everything's still done by a person. And so for us, sort of the difference in a quant and a trading position would be the quants at our firm are pricing instruments. They are trying to identify arbitrage opportunities. They are analyzing the different treasuries, swaps, things of that nature that we invest in, whereas the trading positions would be more deciding which of those instruments they want to invest in, how much risk they want to take on by putting money into those different securities. And along with that, that comes with analyst roles, trading assistant roles. But those are not quant positions at my company. Those are, I'd say, more financially, they require more of a finance background than like a math background.
And I can add on the systematic trading side. So in a systematic trading, they're usually quant dev, quant developer, quant researcher, traders. So the traders are more operational roles where now most of them are still from tech background, but they develop the tools to say monitor trading, monitor our positions, if our data job works as usual. That's what traders do. And quant dev would need to create a lot of tools that help with research or execution or even the pipeline. And then quant researchers like myself focus on developing new ways for finding alphas or new ways to measure and reduce transaction cost, for example. So they are slightly different.
one question, which is kind of interesting, if anyone has something to add very quickly. How are LLMs changing like how much coding knowledge is required in the field?
While LLMs like ChatGPT are definitely useful in work, you still have to prove you have the skills in interviews. So, in my opinion, don't get too dependent on them because during an interview, we can tell when someone's using ChatGPT. They'll be looking at another screen, or we'll ask them to share their screen during technical interviews so we can see that they're not doing things like asking ChatGPT. We want to know that you have the knowledge without it. I definitely think it makes you more efficient. You're not having to maybe look up a bunch of different methods or functions. So I definitely think it's a useful tool, but you still have to get the job on your own skills. That's my opinion on it.
I think we'll just wrap it up with one last question. What's the best way to reach out to all of you?
I think we have a slide with contact information.
We did. We had a slide with the LinkedIn
Yeah.
information at the beginning.
So LinkedIn for the speakers. I think we're right on time. So can you all join me again in thanking the
Thank you so
speakers one
much.
last time? And thank you for all the participants for joining us on a Friday.